So we are business lesson 3 operations. We're going to touch on some invoicing. So like a simple invoice procedure for building site work. So think about it. Invoice is received. Contractor submits an invoice for completed work. Email confirmation. The accounts team acknowledges receipts and logs the invoice. Insurances are checked. Verify contractor's insurance, public liability, workers' comp. Monthly progress payment made. So once approved, payment is processed according to the contract terms. This ensures a smooth payments compliance and financial tracking. Cash flow. It's really important to understand your cash flow, your money coming in, your money going out, your expenses. Cash flow forecasting, even for the smallest sole trader, is highly recommended, probably quarterly, maybe even monthly, depending on how you're going, how much you're generating. There is a really good video on cash flow forecasting from NAB. I'll make sure I put it in the description. Profit and loss statement. We touched on in the lesson before. There is a really good video I'll also put in the description from Xero on how to read your profit and loss statement. As an example, revenue. So we've got contract income, variations, any other income, say 500 grand. Building expenses, materials, labor wages, subcontractors, equipment hire. Total building expenses 320. So our gross profit is $180,000. But we also have our operating expenses. You need to understand that they're the costs as well. Your rent, utilities, insurances, any marketing, admin costs, any other expenses is 80,000. So that'll give you a total net profit and loss statement of $100,000. Really useful, really good for the banks. Your accountant could do it, or you could start working on that yourself. I highly recommend it. Okay. From your cash book, on one of the recordings before, one of the videos, lessons before, you had cash in, cash out, income and expenses. That's really all you need to be completing. The next step is understanding your double ledger accounting. So you probably don't need to complete it, but your accountant will. Yeah, but you want to have a good understanding of what it's about. There's also apply, which is an acronym I'll discuss shortly. And then we'll go into the balance sheet for builders so you can have a good understanding for it. So firstly, what is double ledger accounting? So double entry or double ledger accounting ensures that every transaction affects two accounts, keeping your finances balanced. So it's balancing the books. As an example, buying materials on credit. So you increase materials asset is your debit account, but then you increase your accounts payable to liability on your credit account. We have another example. Receiving payment from a client. So that increases your cash, your asset in your debit account, but it decreases accounts receivable, asset owed to you. Now, that's your credit account. Why is this important? So it ensures financial accuracy, tracks cash flow, and prevents errors in business finances. It needs to be done. If you set yourself up into a business like Xero or MyOb, business software, that will be doing that for you. All right. Okay, we discussed apply. So the key components of accounting for builders who we're dealing with, it's a simple way to remember the key financial elements for a business. So assets, proprietorship, liabilities, income, and expenses. So your assets, so what the business owns, your cash, tools, equipment, materials, invoices owed to you. Proprietorship, so that's your owner's investment. So that's owner's funds into the business and retained earnings from that. Okay, that's your proprietorship. I always find it actually quite difficult to get my head around. Liabilities, so what the business owes. Loans, unpaid supplier invoices, wages, and taxes. Income, money earned, so revenue from contracts, variations, or equipment hire. Expenses, cost of running the business, materials, wages, so forth. Remember the key formula. Assets equals proprietorship plus liabilities, and profit is your income minus your expenses. I'll put another link in the description, how to read a balance sheet. All right, here's a good example. Your assets, cash on hand, accounts receivable, materials, inventory, vehicles, total of 163,000. Your liabilities, accounts payable, short-term loans, wages, taxes, gives you a total of 87,000. Your equity, your owner's investment and your retained earnings gives you a total of 76,000, which is actually adding liabilities and your equity gives you 163,000. As per the assets figure, that balances. All right, briefly, key performance indicators. I always find it difficult to teach, but I find it useful so you can have an understanding. Benchmarking. So, benchmarking is comparing performance against industry standards or competitors. Your KPIs are measurable, or key performance indicators are measurable values that track project efficiency, quality, and success. So, why does it matter? It improves productivity and cost control, identifies areas for improvement, and ensures compliance with industry best practices. Set the standards, compare with industry benchmarks, say your average cost per square meter, measure and track your KPIs. So using reports, use AI or real-time dashboards, identify gaps and improve. So adjust strategies, adjust your planning to meet your benchmarks and have continuous improvement. So learn from the top performing projects and competitors. Follow them, see what they're doing. Key construction KPIs, so project performance time is a percent of your schedule completed versus plan. So checking to see how it's gone. Cost, your actual versus your budgeted expenses. Keep an eye on that. Quality, number of defects or rework. You don't want that. You should not be having it. Safety and compliance, incident rates, number of safety violations. Worker productivity, which is important. Labor efficiency per task. Client satisfaction, so on-time delivery, and final quality assessment. I hope that helps.